Shares of EV truck maker Rivian ended up yesterday 29% higher in its first day of trading. Shares are in the green again this morning, putting its market cap now above both Ford and GM. And joining us right now to talk about this and so much more is John Doerr. He's the venture capitalist and chairman at Kleiner Perkins, and he has a new book out. It is called Speed and Scale, an action plan for solving our climate crisis. But before we get to that, I do want to get your thoughts on what has been these remarkable valuations for companies that are, frankly, not just in the EV space, but relate to your underlying narrative around climate, John. Do these valuations make sense?
Well, rather than comment on any of the individual valuations, I'll say the electrification of transportation is one of the 6 largest trends that we're going to experience as we move from the fossil fuel polluting economy to the new clean energy economy. Rivian, as you know well, has an order from Amazon for 100,000 of its vehicles starting delivery in 2023. I think Rivian, Tesla, they point the way to a massive transformation. Some 2% of vehicles on the road globally today are electric. And the book argues, and I believe, we're going to move to nearly 100% of our vehicles powered by batteries.
So, but John, as a venture capitalist who's talked about this as an inflection point in terms of investing in climate that feels to you like something like the internet in the early days, what do you think that when just in the vehicle space, I'm thinking, how do you look at the quote unquote TAM, the total addressable market? Because some people say, look, you really should just look at how many automobiles are on the road and assume they all get replaced by EVs, and that's the market. Well, if that's the market, the valuations actually don't make sense. But if you start to believe that the vehicles themselves potentially become, battery-powered generators for people's homes and all sorts of other things, then the dynamic shifts, I think, a bit.
Well, I'm in the camp that believes they will become energy reservoirs and will change the way we live in a new low carbon future. President Biden declared that he thought the F-150 was a powerful innovation, and this will not be limited to the new companies and new ventures alone. It's a trend that has the entire global automotive industry on notice. One analyst has estimated that the value of the market for just the electric batteries is $400 billion a year for the next 20 years. So we're going to replace this oil and gas infrastructure with the electrification of transportation.
And you think it's done through vehicles. So then my question as an investor, we have a whole list of stocks. I don't know if you can see it on the screen: Tesla, Lucid, Rivian, Fisker, EVgo, and others. Do you think that people should think about this as a portfolio approach, meaning bet on the whole system and hope a couple of them win? Or is it more targeted than that? Is it not?
I'm reluctant to give other people investment advice. I'll tell you, my own approach is to try to focus on the winners, the ones that have the best management teams, the best strategic relationships, and the best technologies. But the overall message here is, some would say this is a bubble. I'd rather say it's a boom. And booms historically have led to overinvestment, but also to massive shifts in value, to full employment, to rapid market development and competition. We're seeing all that. Turning to my own investments, I fully disclosed them in this book. It's resource number 4. But the point isn't so much making money on the investment as it is swiftly and successfully transforming the economy, the way the internet transformed the economy, to this new climate conscious era.